Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of global financial affairs. Now, folks, we've observed some volatile market action post the geopolitical flare-up. Israel has also initiated the Operation Rising Lion, claiming to have struck at core of Islamic regime's nuclear program, including the enrichment facility of Natanz. Now, JK, what are your expectations with such geopolitical tensions while we have been observing some sort of change in the macroeconomic situations with the softer inflation as well as the expectation of softer inflation in the coming period for the Indian economy and the drop in the European industrial production, which states the otherwise performance of Eurozone.
Good morning. Good morning, Shikhar. Yes, lots of things happening in geopolitics as well as economy side. Geopolitics, of course, was a bolt out of the blue on Friday because we were actually looking at the outcome of the uh, the nuclear deal discussion between US and Iran, but suddenly Israel attacks and then creates a kind of new atmosphere and turmoil in the markets, of course, oil, particularly the oil. And yeah, but at the same time, interestingly, there are theories floating that, this attack might be something to get Iran to come to the negotiating table. Even Trump's statements say the same thing. And definitely, Iran has been, it looks like, while we are not strategic experts, I think it looks from whatever we gather from the various articles that Iran has been weakened in this attack, and therefore major escalation may not be on course unless there is some attack on the any oil tankers or something, which can then suddenly get in a huge new perspective to the whole thing. Otherwise, it looks like it should eventually slowly gather slowly peter out, although it may not totally stop, but it might at least for the markets it may be somewhat not so impactful. But yes, we'll keep an open mind. And on the economy, as I said, yes, inflation data from US last week, PPI, CPI both came below expectations, although the year-on-year numbers were still above the Fed's target. So implication is that Fed will continue to say wait and watch approach when they meet on Wednesday, and no change. And although market continues to discount two rate cuts this year, I think Fed dot plot will be a new input for the market because we haven't had one in the last meeting, and this week this meeting will have the projections. So that is something I will look forward to from the Fed members. On the at the same time, there was also a conflicting thing. On Friday, the Michigan preliminary survey on consumers showed that the consumer expectations on the economy has improved, and the inflation expectations 1 year and 3 year and 5 year all have come down compared to the previous month. Now, at the same time, although we cannot say these are not at a level where it was some 4 or 5 months back, but just some moderation on their expectation. This could have happened because of April 9, decision on 90-day pass, and perhaps people thinking that tariffs have so far not impacted the prices, not reflected in CPI and PPI. That could be one thing that have influence. But yes, Michigan survey was a slightly positive thing. So if you look at the markets, the reaction from the dollar after the event of Israel attack on Iran was, I would say, somewhat to the upside, which was, for recently we've been talking about the dollar is not acting as safe haven and all that, but suddenly you can find that USD yen is up, and then dollar also is up somewhat against the euro, and it's far away from the highs that was seen last week. So somewhere, the dollar is, or I would say the other currencies are tiring. Some pockets of other currencies like euro and yeah, perhaps GBP, these are tiring, and we have the data from Eurozone last week, which was kind of mixed. Retail sales were good, but industrial production, both in Germany and the Eurozone, was weak. So it kind of mixed picture. And so even the yields, despite all the talk of bond market tensions, we are seeing last week some big auctions were there that were well taken by the market. So yield stayed well below 5% for 30-year and 4.5% for 10-year. And in fact, bonds were bought immediately after the Israel-Iran conflict resumed. So getting a sense that there might be some buyback in US. This is something I've been feeling for some time, because market might have in the short term sold a lot of dollars and sold a lot of US assets, and could be buyback. I mean, particularly when we are seeing situation where the stocks are quite overvalued and they are once again near the all-time highs. Possible that US bonds might just stave off a crisis for the time being because of buybacks from the equity guys may be increasing their investment into the bonds, and that could help. And of course, if eventually we get a lower tariff agreement, and Fed is able to see some lesser impact from the tariffs, that's the best situation that we can get. But it may be speaking too early, but at least I'm seeing that the dollar is getting some sort of a support around 98 on the dollar index, and 1.16 euro is looking a bit heavy. Might see some retracement, and we have seen a lot of bad news, negatives being discounted. One more important factor is that we have been talking about large amounts of US assets and US dollar being diversified, but still market may be finding it difficult to find an alternative. Equities, everywhere equities are overvalued. You don't have anything equivalent of US bonds anywhere in the world right now. So there may be some buyback. So I'm seeing all these lead me to think that dollar can be on the verge of some comeback on the major currencies. If you look at yuan, it has not budged on the downside. So it is also holding up 7.17, 7.18, despite all the in fact, today's data on retail sales and industrial production in China would have been a reason for yuan to strengthen, but again, it's still holding up. As for the rupee is concerned, definitely big impact from oil prices. I mean, a spike up of nearly 12 to 14% in just 10 days is not something that the economy can be cope up with. It has to have some impact, and at the same time, because of the overwhelming bearish view on the dollar, dollar rupee was somewhat on the short market was on the short side, and even at the lower level like 85.60, 85.70 and all that was holding those narrow ranges, and the sudden eruption of Middle East tensions and the oil price spike by a big measure has brought in stop losses, and market is now very cautious. As it is, exporters are not encouraged to sell because of the very low premiums, and spot improvement is what they would be looking for. And in the absence of big inflows, I think dollar rupee also gets some support below 85, sorry, below 86, and then a spike up to 86.50 and 86.70 should be, according to me, should be on the cards, because we have again this week heavy central bank events. We start with G7, of course. It's not central bank meeting; it is a political leaders meeting, but outcome will be important in view of the tariff, ongoing tariff, and also the Israel conflict. And then we have three major central bank meeting. G3, I would say, US, Japan, and UK. None of them are expected to change the policy rates, but the statement from the central banks will be very important, because sooner or later, maybe Fed much later, but sooner or later, these central banks are expected to change their monetary policy, Japan to the higher side and UK to the downside. So a very interesting week ahead, how the conflict pans out and how the policies come and what G7 comes out as a communique. Yeah. Thank you, Shikhar.
Indeed, JK, it is going to be an interesting week, folks. And yes, we've been hearing a lot of theories, multiple theories with respect to the geopolitical flare up, but major escalations may not really be on the cards, as JK mentioned. And having said that, now with de escalation probably on the cards, we can expect the market to react in that particular fashion. But At the same time, a 10-12% uptick in oil prices will not be ignored and should not be ignored by the market participants, which has led to the gap up opening and the kind of movement we've been seeing for dollar rupee. Although the market participants before this flare up were not really expecting much of a move on the upside, stops being triggered, as JK mentioned, was observed, and it has moved the range for the dollar rupee, as we have seen, towards 85.70 to 86.50 on the cards, without a de-escalation in the geopolitical tensions. Having said that, again, yes, there is a heavy short bias for dollar, and any positive update may change this stance and show us some sort of different side of the volatile action. It can be probably from the lower tariff rates, or uh, it is also probably because of the lack of alternatives available in the form of US bond yields. What really needs to be seen is, even with the softer PPI CPI data, the expectation continuing at 2 rate cuts for the year, what does Fed do in the current FOMC? As of now, for the current FOMC, the expectation continue to be of no change in rates, but the statements that would come will be of prime importance. And likewise, we'll have the central bank meeting from two other spaces as well, which is Bank of England and Japan's Bank of BOJ. Now, these two are also expected to have no change in rates, but the statements are still to be watched out for. That's it for today, folks. We shall come back again for another round of updates tomorrow. Thank you so much for joining in and listening in. Thank you.